Hi, welcome to the Living in Toronto YouTube channel. My name's Stuart Nodell of Remax Hallmark, and on today's episode I'm going to cover 7 hidden costs you need to know before moving to Toronto. I hope you find this video informative and helpful. Please consider subscribing to my channel and click on the notification bell. That way you'll be notified every time I upload a new video. Let's jump right into it, and at number 7, mortgage insurance. If you're not putting down at least 20% on your mortgage, you're going to be in what's considered a high ratio mortgage, which requires the mortgage to be insured. It's really a precautionary measure for your lender in case you default on the mortgage. Typically, premiums are going to range between about 0.5% upwards of 4.5% of the total mortgage that you're taking out. Most mortgage policies in Canada are provided by CMHC or Genworth. Your premiums are dependent on the size of the down payment you put on. So the bigger the down payment, the less your premiums will be. Your premiums can be paid in one lump sum at closing, or they can be paid as installments with your regular mortgage payments. However, when you pay them as installments on your mortgage payments, you can expect to pay more as you'll be paying interest on those premiums. But the interest rate will be the same interest rate of what your mortgage is. And living in Ontario, you're subject to provincial sales tax levied on mortgage insurance premiums at 8%. In some cases, even with 20% down, you may still be required to get mortgage insurance. This typically happens when you are self-employed or if you've had poor credit history. Hidden cost number 6, home insurance. The cost of insurance can vary depending on where you live, cost of the home, any red flags the insurance provider may pick up on, things like wiring, plumbing systems, floodplains, area crime rates, and even postal codes will have an impact on the cost of insurance. In 2020, the annual average home insurance cost was about $2,200 in Toronto. However, you could expect your own cost to range somewhere between about $1,000 and $3,000 per year. One of the most important factors to take into consideration when calculating your home insurance rate is the replacement cost of your home. This is the material value taken from renovations and additions, not the actual price for which you paid for the home. It's important to keep an eye on liability and comprehensive insurance because that protects you from lawsuits in the event that somebody gets hurt on your property. And other factors you need to consider are your cost of belongings, such as contents insurance, how close you are to the nearest fire hydrant, any past claims history, as well as your credit score can impact home insurance premiums. Hidden cost number 5, home inspection. An inspection is going to cost roughly $500 plus HST, and you can expect a good home inspector to provide you with a comprehensive report outlining all of the deficiencies with the home. They'll check things like roofing systems, furnaces, air conditioning, the foundation. They run an infrared camera to check for if there's adequate insulation in the property, whether there's active moisture, and it'll really provide you with the kind of confidence in the product that you're purchasing. And as well, because of that, they're providing you with an unbiased opinion. Hidden cost number 4, legal fees. And the fee will depend on a variety of factors. It could be the complexity of the home you're purchasing. It could be the level of expertise your lawyer has. It could be the type of home you're buying. However, in Toronto, you can expect your legal and disbursement fees to cost $2,000. Title insurance is a separate cost, and that depends on the purchase price of the home. You can expect approximately $200 to $350 for title insurance, which is facilitated by the lawyer, and it's a one-time fee. On titles that are more complicated, that cost could increase. Title insurance is a protective measure to protect the home's title. Things that can come up would be ownership disputes, liens, encroachments, surveys, property tax arrears, and zoning issues. If you're buying a condo in Toronto, a legal fee component you'll have to consider is the status certificate report. For your lawyer to review that, there is a cost. However, you want the lawyer to make sure that there's no judgments against the condo corporation, that there's no special assessments, and that the current owner that you're purchasing from is current with all their maintenance fees. Lawyers are responsible for many other things, but most importantly, closing the sale. They're going to handle the exchange of funds from your lender to the seller, as well as title searching, which happens about 2 weeks prior to closing, and what they're checking for is to make sure that there's free and clear title, there's no encumbrances, there's no liens registered against the property, and then they'll transfer the deed into your name at closing. Adjustments. Covering such costs that the seller has prepaid. These are things like prepaid property taxes or maybe even a utility. Your lawyer will break down the per day cost so that you know at time of signing what those expenses are, and then you'll pay for them at final signing. And that'll all take place just prior to closing. The minimum amount you'll need to put down really depends on the purchase price of your home. Typically, you can expect to put down anywhere from 5 to 20% down. Throughout the course of your transaction, your lawyer is likely to be out of pocket for expenses on your behalf. These are known as disbursements, and they tend to be costs such as land title and tax searches, land registration fees, digital execution fees, agent fees, courier expenses, and general office expenses. There are some lenders that will provide financing with less than 5% down. Hidden cost number 3, down payment. When buying a home in Toronto, the down payment is essentially your skin in the game. The down payment is deducted by your lender from the total cost of the home, and the rest of the cost is covered by your mortgage. They do come with higher interest rates, which will cost you more over time. However, this might be the opportunity that you need in order to get into the market. Suppose the home you're purchasing costs $800,000. If you're doing a 10% down payment, that means you need to have $80,000 at closing. However, keep in mind that your lender, they're going to expect that you have your closing costs separately outside of your down payment. And things that you can expect to pay would be your legal fees and land transfer taxes. Hidden cost number 2, deposit. This is a critically important conversation that you need to have with your realtor during your initial consultation. It's very easy to take for granted that the fact, yes, you do have deposit money, you do have it in an account. However, do you have quick access to those funds? Because the deposit is actually going to get cashed by the listing brokerage once you do have an accepted offer. And typically, you are either going to have to present your deposit with the offer, as here in Toronto, it's a very fast-paced market, and that's very typical, or you're going to have to provide your deposit within 24 hours of an accepted offer. And if you don't, you could be in breach of contract. So this is critically important, and it's an easy oversight. So just make sure you're prepared and organized so that you can either do a bank draft, a certified check, or wire transfer. And the deposit amount should really be a minimum of at least 5% of the purchase price to show that you're negotiating in good faith. And the number one hidden cost for when moving to Toronto, land transfer taxes. And here in Toronto, we have 2 of them, both the provincial land transfer tax as well as a municipal land transfer tax. However, if you're a first-time home buyer, you can be rebated for up to $4,000. The cost of the land transfer tax is calculated as a percentage of the cost of your home. The land transfer tax calculator works as such. Amounts up to and including $55,000 are at 0.5%. Amounts from $55,000 to $250,000 are calculated at 1%. Amounts from $250,000 to $400,000 are 1.5%. Amounts from $400,000 to $2 million are calculated at 2%. And amounts that are over $2 million are calculated at 2.5% of the purchase price. I hope you found this video helpful and informative. Please consider subscribing to my channel, and don't forget to click on that notification bell. That way you'll be informed every time I upload a new video.